Thanks, Chrissy. Good morning, everyone, and it's glad to be back in Sydney again after a very long time. The picture on the screen is our operation that we have in the Eastern Kimberley in Western Australia. As Michael mentioned earlier today, he just mentioned about the energy transition metals, and we are right in the middle of that because it's a nickel sulfide operation. That's what we run, and we mine nickel, copper, and cobalt from this small operation in the backyard of WA. So over the next 15 minutes, I'll take you through the value proposition that we bring. I'll skip through the usual disclaimers. The presentation has also been lodged on the ASX platform. In regards to the corporate overview, our share price at the moment is 13.5 cents. It's a very low base, if you ask me, and I'll talk about that a little bit more. And it gives us a market capitalization of about $280 million. The share price has come down from April last year when the nickel price was really strong. And as Chrissy mentioned as well, as we were ramping up the project, the costs were going up as well, and that brought our share price down. But we are getting to nameplate capacity later this year, in the next couple of months. If you look at our cash balance at the end of March quarter that just finished, we had $33 million, and that was about $5 million more than the previous quarter. So it's just good to see the cash going up. And during the quarter, we were also able to pay the debt down that we have with Trafigura, who are also our offtake partners for their operation. Our largest shareholder is IGO. They own 21% of the company, and that came about after IGO took over Western Areas last year, which was another nickel miner. Our second and third shareholders are Zeta, and Ausbil, and they're very supportive shareholders. The top 20 own about 67% of the company. We are covered by 4 brokers, Canaccord, Macquarie, Morgans, and Euroz Hartleys, and the research papers are also on our website. Now, I mentioned that we are quite cheap, and the reason I say that is when you look at the nickel sulfide producers in Australia, there are only 4 major companies. And then when you look at the pure nickel players, there are only 2. And last month, Wyloo made a bid on Minco, and that means that only Panoramic now exists as a pure play ASX-listed nickel producer. You step back and you look at what's happened over the last year, and you see that IGO took over Western Areas. Then we had BHP move on Oz Minerals. Wyloo took over a project in Canada called Norant, which was a bit of a fight between BHP and Wyloo. And then Wyloo right now are in the middle of a takeover of Minco. And you also see the back end where the end supplier or the end user is now trying to do deals with the companies that mine these transition metals. BHP did a deal with Ford and Tesla, and Vale did something with Tesla as well. So it's just a very interesting space that we are in, and we are certainly a producer with a long mine life in front of us. So let me talk about the project. The project is in the Kimberley, Eastern Kimberley, as I mentioned before. That hasn't changed, has been there for 20 odd years. Our tenement package is what you see in the middle. So IGO is a shareholder who owns 21%. And they also surround us in all directions at the moment. So everywhere we look, IGO surrounds our tenement package. The green bits are the ultramafics that we like to drill and target to find this highly prospective mineralization. The picture on the right is the mine. So the old mine is under the open pit, which is called the Savannah mine. That was mined for 12 years. And during that 12 years, the company paid out about $114 million in dividends. We are now mining the Savannah North mine, which is to the right of it, and that has another 12 years in front of it, which is what we are currently mining. We are also getting some of the remnants from the old mine as well. Last month, we put out our updated life of mine plan. So given costs were going up, our resource also was growing, so we thought we'll update the market. So we have about just under 12 million tons of ore at the moment at about 1.2% nickel. It's got a 12-year mine life. We are going to be producing about 9,400 tons of nickel. around 5,000 tons of copper and about 700 tons of cobalt. So it's a very healthy, long life mine life. This little project is going to provide about $1.4 billion in cash flow, has an NPV of about $844 million. We have a capital loss at the moment, so when you put that in, the post-tax NPV is quite healthy at just under $700 million. If you look at the graph, it shows you our profile and the cost profile as well, the production and the cost. And the first 2 years are high because you're spending capital, setting up the mine. And the next year, our cost comes down. And then after that, it becomes a production mine. And then it just starts printing cash. Now, just on the mine, if I were to look at the mining and processing, what's happened over the last quarter, our safety is tracking relatively well compared to a new restart. We have all the people and the labor on site after all the issues during the COVID times. Last quarter, we were impacted by weather. There was lots of rainfall in the eastern Kimberley region, so it slowed our production down, but we still kept a very similar profile to the December quarter. This quarter has started off relatively well, and I think we'll hit nameplate capacity by end of June this year. So another couple of months, we'll be at the nameplate that we've been talking about for the last 2 years. We are seeing labor and fuel. Somebody else mentioned the same thing. The costs are high, but we see that as quite stable at the moment. And there's lots of business improvement projects underway that are actually pushing the cost down. And we should see that over the next quarter. The recovery is pretty good. Like nickel recoveries, every quarter has improved. And the concentrate that we make is very clean, very well sought after by our offtake partner. We sell it to Trafigura, who are a trader, and they could sell it to anyone they choose to, and we get some really good offtake terms from them. So the picture on the right is the old, you see the mine under the open pit is the Savannah mine, which is like the remnants that we are mining. And then you see the Savannah North, which is the new mine that we're opening up and getting ore from. Remnant mining is a little bit slow. It does take a bit of time to get it right. So we asked our geologists to see whether we could find more ore under the existing Savannah mine. And sure enough, they spent some time drilling it, and surprise, surprise, they found another continuation of that ore body. And our geologists, they're very creative people. They could find an ore body, but they can't name it properly, so they called it Savannah Extension, right? So that's what we are getting into, and I'll talk a little bit more in the next couple of slides. So we're a small company, we are ramping up, and last year we spent $3 million on exploration, which is only a small budget. And the geologists, again, they spend the money wisely. They drilled, they found about 5,000 tons of nickel. We converted that into reserves, 3,500 tons. It might sound a bit small numbers, but that alone is worth about $100 million in revenue for us. And we had some really good hits. So we're drilling in the Savannah North mine, which is just under the areas that we're going to be mining for next year. And we had some really good hits. So we're talking 15 meters to 30 meters, 1.8 to 2.3% nickel. And they are spectacular hits. So when I say they are spectacular hits, a couple of slides ago, I talked about the life of mine grade. The life of mine grade is 1.2%, or just under 1.2%. So these hits are really good. They'll get converted into reserves in August, and we'll have a better understanding of what we are going to be mining in the next few years. Savannah itself, again, target 1 is the area called Savannah Extension. And you could see some of the hits we've got. Again, 9 meters to 30 meters wide, 1.2% all the way to 3% nickel, right? So great hits. We haven't even finished our resource modeling on it, but we know it's there. So we've actually started developing that area now, and we are planning to mine that or bring it into production from July onwards. So our exploration manager, Andy Shaw-Stewart, he's here today, and he'll be at the booth. He wanted to drill under the 900 fault, which is like an unknown area for us. He wanted to drill a couple of downhole EM holes, just target holes, and then we were going to do a survey to see what lights up to target and drill. And sure enough, the second hole that he put in, which wasn't supposed to hit mineralization, did hit mineralization, which is a good indication. We put those results out yesterday, and again, some really good hits, right? So it's gone from an unknown area to something that is, that's coming along really exciting. And I can't wait to see what he's going to call it, because I have a feeling, I heard him say it's going to be Savannah Extension Extended, which doesn't really sound too well, but anyway, let's see where he lands. But this is basically telling us that Savannah continues and Savannah North has a life on its own. So it's going to be very much a long lead mine life that we are talking about. On the surface, same thing. We've been concentrating so far to date around the Savannah complex. But when you look at the broader tenement package, it's very highly prospective. The Stony Creek and the Northern Ultramafic Granulite, these are two projects that we drilled last year to carry out downhole EM surveys. We haven't been able to do that because of the wet season, and he's planning to do that in the next month. So we should have a good understanding of what to drill in that area. Frog Hollow has vanadium titanium magnetite. It was drilled in 2018. We haven't followed up with it yet. And again, it's a battery mineral, so we'll just follow that up in the next year. The Norton intrusion is quite exciting. We never had heritage clearance in that area. We never had land access agreement there. We've only done that in the last year. The heritage survey is planned next month, and then we plan to drill in that area. And that's got very similar characteristics or rock characteristics to Savannah. So, that's very, very exciting for us. Now, if I switch to sustainability side, our focus really is to reduce our carbon footprint. So we burn about 20 million liters on the site to run the power station and the underground. We are looking at a solar farm at the moment, which is about 14.4 megawatts, and that will reduce the carbon footprint for us. We're looking at various options. Some are like a lease buy option, but we'll know more about it in the next few months on which way we progress. And once you go with a solar farm, the underground converts to a more electric mine as well, electric trucks, electric loaders, and then that reduces the cooling that we need underground, the ventilation that we need underground, further bringing our costs down. But as I said to our guys on site, one little step at a time. Next year, our focus is we're going to get 3 electric light vehicles underground, and that'll be the start of our electric vehicle journey at Savannah. On the community, we are very engaged with the local communities. There are lots of small communities that we target and work with them. We started off with the Teach, Learn, Grow program, where you spend time with the school kids, giving them a better opportunity. And we've started employing local, trying to bring local employment into the company. Over the last 12 years, we paid about $16 million in royalty, and we continue to do so for the next 12 years as a minimum. One of the local community kids, very good football player, we actually got him an opportunity as a cadet in the Fremantle Dockers team. I'm a Fremantle Dockers supporter. We haven't won a flag, but who knows? This kid could turn the whole club around one day. Actually, there's a Sydney versus Dockers game this Saturday, so I'm hoping the Dockers have a win. So circling back to our value proposition, listen, the mine is in the backyard of WA, safe operating environment. Ramping up is going relatively well, and by June, in another couple of months, we'll be ramped up. The cost profile of that mine is $8.57 a pound, right? Nickel at the moment is $16.50 a pound, so there's a large margin on it. It's going to produce $1.4 billion in cash flow, and as I said, a significant amount of NPV value as well. The bell is going. Thank you very much. That's it.
Thanks, Big Dave.